Hi, good afternoon. Welcome to India Stock Market Strategy by Vivek Bajaj. Today is 9th of November, and we're going to do analysis of market. We're going to do a very detailed understanding of where the market is and what potentially we can do in this market. So let me do a screen sharing and start the discussion right away. Here I am, I'm in front of you, and this is my small presentation. So yeah, as you know that my framework of analyzing the market is very simple. I look at the 10,000 feet market, then 1,000 feet, then 100 feet, and finally 10 feet from which I try to find stocks. 10,000 feet, I look at the dollar index and global equities, what they're doing, because they are the ones who are going to lead this whole, market activity follow on. 1,000 feet is more about Indian market centric, what Indian indices are doing, FIs are doing, what kind of market breadth is there, is market overbought or oversold? That will be understood. 100 feet is more about identifying opportunities which could be top down or bottom up. Top down is typically through sector rotations or results, etc. And bottom up is typically running screens like combo scans, etc., which we will discuss in our 10 feet view and find stocks where momentum could be there. Okay, so let's start the analysis, and I'm going to do the screen sharing of trading view as well as stockage. Stockage I use for my data analytic purpose, and trading view, as you know, I use for my chartical analysis purpose. So let's start with the 10,000 feet view, which is basically the global markets. Where when we talk about the global markets, we talk about overall markets plus dollar index. So let's look at the dollar index first to start off with. So here we are, dollar index. So if you look at the trend of dollar index, it has been in negative trend for some time. It is consolidating here. You see, this is a decent consolidation range, although the trend reversal has not yet been confirmed. Trend reversal only happens when the index stays above the previous swing high for some period of time. This was a major important level, which is around 100. And if dollar index remains below 100, it is an indication that the dollar trend of downward trend is still intact. And if dollar is downtrending, then emerging market index and other equity indices tend to outperform. So if you look at the emerging market index vis-a-vis dollar index, this is the emerging market index. There is an inverse relationship where dollar index remaining down and emerging market index goes up, right? The emerging market index has shown strength. If you see, these are the major moving averages, and the index has been above all these major moving averages as well. Now let's go to Nifty and see where it lies. So yes, this is Nifty. Nifty has done reasonably well, not outperformed the emerging market index. If I look at Nifty divided by emerging market index, Nifty has been kind of underperformer vis-a-vis the emerging market index. Okay. But on a standalone basis, Nifty has done reasonably well in couple of months, but there is a fair bit of correction which has come in recent days. That correction was fueled by some recovery in the dollar index. Now, it is important for us to see what dollar index is about to do. And to understand what dollar index is about to do, you have to look at US yield curve, which is US 10-year yield curve, 30-year year, predominantly the US yield curve, which is a reflection of inflation in US. So in US, if inflation is expected to go up, which doesn't look like a case right now, considering that a lot of unemployment, etc., is happening there, US interest rates looks like it will remain at a lower level. If that happens, then dollar index is also expected to stay low, which means the emerging markets, commodities, etc., will continue to do good. So yes, there was a bit of correction in Nifty in last few days because of dollar index trying to recover. But since dollar index is still below 100 level, it is 99.55, we can safely presume that market may recover from lower levels and it may start the bullish trajectory. So this is 10,000 feet. Now let's go to 1,000 feet view and look at the broader indices. So I look at Nifty, Nifty mid cap, Nifty 500 and Nifty small cap. If you look at the short-term trend, which is a 2 hourly trend in all indices, is negative right now. Well, if that is the case, then obviously I don't want to put my neck right now on market and try to buy. Okay. I will be conservative and I'll wait for all these four indices to come in green territory before I start buying in the market. So it's a market which is a hold market, not an aggressive market to buy at this moment. Now look at the market breadth. So for market breadth, let me take you to analytics section of StockEdge. There is something called market breadth here. These are the breadth of all major indices, including broader indices like Nifty 50, Nifty 500, and sector indices as well. Typically, how you read market breadth is you go inside, say, Nifty breadth, and you see the market breadth is neutral. Okay, it is not grossly overbought or oversold. So I can have any opinion on market at this moment because the breadth is not very indicative. In fact, when market breadth became very, very positive around these levels, 25,800, 25,900, that was an indication that there could be a level of profit booking or correction, which has got initiated. The market has corrected a bit, but abhi, for the time being, doesn't look like that market has any overbought or oversold indication. Okay. Similarly, if you look at Nifty 500, which is a major indicator of broad-based market action, here also you see the market is in a kind of a neutral zone. So there is no indication of overbought or oversold in the market. But there will be a lot of indices which are in positive breadth and negative breadth. Remember this, when any index is highly positive breadth, you have to buy stocks in that index. And if any index is highly negative breadth, for example, India tourism, India defense, these are red, chemical, consumer durable, these are red. That means clearly these sectors are not of interest right now, and one should avoid putting money in these sectors. Okay. Now let's go to the sector analysis now, which is again a 100 feet view, and see the sector rotation and see which are the sectors where most of the rotation is happening right now. So the one which are positive are having the positive rotation. Okay. So crude oil oriented, because crude oil is going down, all the refinery stocks are going up. Diamond and jewelry, alcohol, non-ferrous, iron and steel, diversified. So these are the sectors where there is a positive rotation. And the sectors where there is negative rotation are these. So we should not buy, if we are a momentum based market participant, we should not buy these sectors right now because there is a lack of momentum in these sectors. Okay. Now let's talk about, okay, let me just go to PPT. Yeah, let's talk about the results. So there is a result season going on and a lot of results has been declared. So if I go to index analytics and see the result, so if you look at the graph of Nifty results, so 42 company results have already been declared out of 50. And if you look at the growth, there is a better growth in this quarter vis-a-vis other quarters as far as revenue is concerned. And if you look at the PAT is not growing as much as the revenue. But the good point is that there is a revenue growth. So at least there is some bit of recovery which is getting witnessed as far as corporate profit, corporate business is concerned. Now let's go to Nifty 500 and see the same thing. So yes, Nifty 500 also, the sales growth is apparent. EBITDA growth is also there. And if you look at the PAT growth, it is also decent. I mean, the recovery which happened in December, the same recovery we are witnessing in September. So that means corporate India financials have become better, right? And if corporate India performance goes up, this is September quarter. Remember, the GST impact, etc., will come in the December quarter. So, if coming one quarter also, if corporate India performance goes better, market will also get a breather or support from that performance. Okay. Now let's go to so this 100 feet. Now let's go to identifying momentum stocks. Now see, there are various techniques of identifying momentum stocks. The important thing is that you need to be consistent with the technique which you follow because consistency pays in momentum investing. You know, some people use chart patterns, some people would use sector analysis, some people will use sector rotation. There are different methods of finding stocks. One of the method which I follow, which I have shared with you also, is a combination scan which I've created in StockEdge. And one of the combination which I really like is a FIPA combination. If you look at the characteristics of this combination, so stocks which are within 52-week high zone, Return on equity better, return on capital employed better, quarterly net profit better, quarterly sales better, cash flow better, and momentum score, which is our proprietary momentum score over a period of 1 month, 3 month, and 6 month. Proprietary momentum score is also green. Now, these are the stocks which I should consider if at all I want to play momentum. What I will do is I will sort these stocks based on, say, NSE listed stocks, and I will only look at the market cap, which is 100,000 crore and above, and apply. Now, these are the stocks which I have to see. I will download this in an Excel sheet. Let me download this, open. And here we are. So there is something called perfect match and there is something called almost there. I would suggest look at perfect match because these are the stocks which are satisfying all the criteria, and very high likely these stocks will give you a sustainable momentum movement. Okay. Now let's add all these stocks in trading view. So let me delete the trading view here. All right, so if you can see, these are the stocks which I have. This is my template for my research. So look at this stock, GPPL. The above cloud is the 52-week high zone. The below top cloud is the 52-week low zone. This is a new indicator which I've developed in StockEdge, sorry, in TradingView, which I share with my StockEdge Club member inside StockEdge Club. StockEdge Club is a community which I run with more than 10,000 members who are actively getting right education and right analytics from me and my team. Okay, so I share these indicators which my club members share. Okay, now this is a stock which looks very interesting, crossing above 200 moving average. There is a strength here and it is just entering the 52-week high zone. So definitely this is one stock which I would like to track. So let me just color it as orange. Okay. Next, Radico. Beautiful. Look at this chart. Very good chart. The stock has been strong for some time. It has always maintained its 52-week high zone. So this is the beauty of momentum investing, where if you participate in a stock in early days from here, and if you can ride that whole movement, it becomes a very, very good risk reward ratio trade for you. Okay. I mean, try to get stocks which are, we have just entered the buying zone, like this stock. The Radhika has already moved up, right? If you look at this stock, it has just entered the buy zone. And because these are fundamentally good stocks and there's a reason for them to go up, there is a possibility that the stock can go up. See, there is a process which we need to be followed. And if you don't know the process, you have to learn the process. I don't want to share stock ideas with you because then the whole purpose of creating this video will get lost. But yes, there are methods and one needs to be mindful of the methods. And if you can't give time, if you don't have enough bandwidth to give to the market to find stocks on a daily basis, then I suggest just subscribe to StockEdge Smallcases, which are pure quantitative method of identifying stocks. You just have to give 15 minutes a day for 15 minutes a month for peaceful investing journey using StockEdge Smallcases. All right, so this is what we have done. We have kind of revised what is happening in the market. Definitely not an area of concern right now. Till dollar index is below 100, we are fine. Market is not looking in a hurry to go up also, but results are very good. And I think if we can focus on strong sectors and industries and strong stocks in those, I think we will definitely make money in market, irrespective of where market goes. All right. Thank you so much. Have a great Sunday and please take care. Have a great trading week. Bye bye.